You're looking at the price action here today, and really the strength that we've seen in this market over the past couple of months after there was that little bit of a scare back during the summer. When you look at valuations, when you look at the economic backdrop, and you look at the earnings backdrop, is this a fair level for the market to be at?
I think so. I think investors need to continue to be very selective. It's been a market that has gone up on the backs of very few. And what I mean by that, if you look at the sector spreads and the leadership in the market, we've only had 4 out of 11 sectors outperform. A majority of stocks are actually trailing, which to me is an opportunity. While the markets are up over 26% on S&P 500 and for Russell over 30, majority of stocks have not seen those levels. So it's a great opportunity to be selective and really find values in the market that we still see within healthcare and other areas of the market like communication services and actually financials.
Is the story, though, going forward, particularly as we look to 2020 and we question whether the gains that we're getting now are going to sustain themselves into next year, is that going to be driven by EPS? Is that going to be driven by low rates? What's going to be the catalyst?
Well, we certainly need to see some earnings growth. With Q3 almost at the end here, we've had over 96% of companies reporting, and so far earnings growth is tracking down 2%. For the rest of the year, we will barely be up, maybe 0.1%. So we certainly hope to see more earnings growth as we cycle through into the next year. I think projections right now stand for about 9%, which seem a little too high, and maybe by the time the year rolls around, will be around 5 to 6%. So if earnings growth can really demonstrate some strength on the heels of better fundamental outlook, but also if we have any recovery as it relates to the dollar and maybe some welcoming weakness for the multinationals and just better, I think, sustainability as it relates to geopolitical picture, I think it will certainly sustain markets going forward.
Good morning. What does the M&A story that we're seeing at the moment tell us about market valuations? A lot of M&A this morning, a lot for the market to digest. Does that tell me the market is underpriced, overpriced? What clues are you taking away from it?
I think the clues we're taking from the market is there's value to be had. And I think similar to the media space where content is king, I think scale is going to be a king in certain areas of the market. You're seeing that in the retail space, and you're certainly seeing that in the financial space. I think Schwab and TD Ameritrade is an example of that, where many of the businesses are really being pressured by the fact that there's no revenues to be had because we're going to zero. So you need to have scale and efficiencies and operational agility that will allow you to be much more profitable in the businesses that you still have, like custody and others. So there's value to be had and opportunities for the big guys to get bigger and to sustain that leadership through scale and advantages of scale.